So I plan to spend 40 minutes for this seminar, and we are in the first session, first part of the seminar introduction. So this is in this part I will just go over the overview. So in the next session, in the next part of the session, I will go over the recent developments in the Japanese economy. And this obviously I will not be able to cover too many aspects of the Japanese economy, so I will basically go over the most important issue, the growth and upward gap and the inflation. So in the next part of the seminar, I will be discussing the medium-term outlook for the Japanese economy. I will go over some history from 1990s, 2000, and present, and then how the Abenomics is progressing or not progressing, and then the outlook toward 2020. So in the fourth part, I will discuss one thematic issues. This is a feature I plan to incorporate into monthly seminar. So in all the monthly seminar to follow, I will be discussing recent developments and then longer term outlook, but then I will try to pick one topical theme. And for this September, I chose BOJ balance sheet, and it's tapering, and I do believe it's a topical issue given that the Fed is about to embark on its final and hopefully final part of the exit from the QE and how it factors. So I'd like to talk about what could be the case for the Bank of Japan. And then lastly, I would be very happy to take some questions related to the contents of the seminar, or given that given the relatively small size of the webinar, I'll be very happy to answer questions if you have outside topics I covered. And for the questions, it would be great if you could send it to organizer, unless you specifically want to display it to everybody. So let's move on to the next session. So recent developments. So I think partly because BOJ Governor Kuroda talked about this, I think this has become widespread common knowledge that Japan did have a pretty good growth in the April-June quarter, namely 1% QOQ growth and 4% QOQ annualized growth. I do believe there will be some downward revision in the second preliminary releases, but then the fact still remains that Japan did enjoy a very robust growth in the April-June quarter. But then I think it is actually more important to think about that this robust growth wasn't just this April-June, but it has been a growth streak of a positive growth for the last 6 quarters. The growth of these 6 quarters has been supported by domestic demand, especially private consumption. The chart you're seeing is the QOQ GDP growth and then the contribution of its subcomponents. So the blue line shows how much private consumption accounted for the growth of GDP, and you do see that there has been consistent positive contribution from the private consumption. So there has also been external demand, contribution from external demand. So this is a chart comparing real GDP as well as net export. So you do see, especially for the first 4 quarters, so basically the 4 quarters in 2016, we do see significant contribution from net export, but then also in the last 2 quarters, we do see that especially in the last April-June quarter, net export actually did contribute negatively. It doesn't necessarily mean that the export shrunk in the quarter, but it was more the case that the import grew more strongly than export. But the point I think is Japan did enjoy a pretty robust 6 quarters of growth, and it was mostly balanced growth coming both from domestic demand as well as external demand. But for the last 2 quarters, it was more domestic rather than external. So there has been pretty good growth, and given Japan's potential GDP growth is fairly low, it is, well, one has to estimate it, but it's considered to lie somewhere between 0 to 1%. And Bank of Japan Cabinet Office nowadays tend to think that the potential growth should be around 0.5 to 0.7%. But then when you look at actual growth in the 6 quarters, it has more or less exceeded its potential. So if there were economists among you, or even if you're a non-economist, I think it's relatively basic. But then if the economy is growing above its potential, that means that the upper gap should be rising. Well, if it's positive, and if there was a slack in the economy, that the gap should be shrinking, and that's exactly what happened, as you see in the next chart. So this shows you the upper gap of Japanese economy. So when it's negative, it means there has been excess capacity in the economy, which could be the source of deflation. But as you could see, in the latest quarter, April-June quarter, both estimates by Bank of Japan as well as the Cabinet Office shows there is now a positive GDP gap. So in other words, that the Japanese economy is now starting to run above its sustainable capacity, and it is generally thought such a positive upper gap is generally thought to lead to inflation, which is what Bank of Japan is has been pursuing for the not just actually last few years, but then for the last 10, 15 years. And so this positive upper gap is basically the hope for the Bank of Japan and also for the Japanese economy, for the Japanese government, that if they could keep up this growth, we could actually see inflation in Japan. So, but is this theory, how reliable is this theory? So there are many economists who argue, well, economists and non-economists who argue that it's very difficult to generate inflation in Japan. So the upper gap has to be pretty large, or there are even some economists or non-economists who argue that Japan simply is not capable of generating any inflation at all. Well, I think it is natural to think that inflation is difficult to generate in Japan. I think Japanese people have got used to the idea of deflation or price not rising at all. So even Bank of Japan does admit that the inflation in Japan tend to be formed through adaptive expectation. But then if you do look at the history between the correlation between output gap and domestic demand deflator, there is definitely a correlation. And even in the last few years, as output gap, the negative output gap shrunk, we do see deflation to also shrink. And as you could see back in 1997, 1990, as output gap rises, as positive output gap widens, we do see domestic demand deflator to climb. So if you look at what happened in Japan between 1988 to 1991, if you see that in 1988, well, output gap was relatively small, less than 1%. But then as it has persisted and as it has grown, as the positive output gap widened toward 2-3%, you do see relatively, I would say, sudden pickup in the rise in domestic demand deflator. And I don't think I don't think there's actually any reason to rule out that this won't happen to Japan in the next 2 years, especially if Japanese government and Bank of Japan manage to heat up the growth, heat up the output gap toward 2-3%. And that could happen if Japan managed to grow, say, 1.5%, which would be 1% above its potential. And if Japan could keep up such relatively, high growth, but achievable growth of 1.5% for the next 2 years. And I do believe that there is some sign that the inflation is on a rise again. So this chart shows you trim CPI. This trim CPI basically trims the volatile part of the consumer baskets to measure inflation. So so what remains in a trim CPI is basically the core or trend part of the inflation. And in the last few months, we are seeing moderate. We are seeing a rise in the trim CPI. So I do think, and then there has been a rise in positive output gap. So I do think it's more reasonable to think that the inflation is on the rise, and if Japan could avoid any significant negative shock in the next 1 to 2 years, I think it's more natural to think reflation or inflation could take place in Japan. So I think so whether it will such inflation and also wage inflation materialize or not it is the biggest issue. But my money will be on us seeing a positive surprise on the inflation front. And that concludes the recent development part. So if we could move on to medium-term outlook. So this chart may require some explanation, but then for economists among you, it should be relatively easy to understand. So it's basically an effort by economists to try to visualize the growth and inflation of the economy. So on the horizontal axis, there's a growth that it expresses growth, and on the vertical axis it expresses inflation. So, for example, in 1987, what we see is Japan was enjoying healthy growth, some slightly above 2%, and no inflation, no deflation. So that has actually been the state of inflation in Japan for many years, except for the time of our oil shock. So the size of the circle also has a meaning, which that is the size of the debt in the public sector. So the circle is small, which means Japan only had 30% debt to GDP in 1987. So let me take you through the history quickly. So in 1991, so there was a bubble period between 1987 to 1991, so higher inflation, higher growth. But then bubble inevitably burst, and in 1996 is one one important turning point for Japan, in a sense that Japan deflation started in Japan, although the growth remains still positive. But then to 1997 to 1998, Japan went through the financial crisis, and IT bubble helped Japan a little, but then the Japan was set again by IT bursting of the IT bubble. And from 2002 to 2007, there was a prime minister called Prime Minister Koizumi, and I do believe he did a admirable job when it comes to trying to rescue Japan out of deflation. So between 2002 to 2007, Japan did move toward higher growth, higher inflation direction. However, the unfortunate for Japan, Japan was hit by a Lehman shock, which put Japan way back into negative growth deflation territory. And Japan did manage to climb slightly out of deflation through significant economic stimulus. And that's where Prime Minister Abe came in with his slogan of Abenomics. So how Abenomics has progressed or not progressed. So here I would like to introduce three scenarios. So the first scenario is, this is a scenario where Abenomics was to succeed. So if it was to succeed, the Japan would have tread on the growth map, on the risk typhoon map through this format, 2012 to 2020. So this would have been ideal path for Abenomics. But then there were risk scenarios. So one was a stagflation scenario, which didn't take place, fortunately, but there were people who argued that this could have taken place. So this is a scenario where the economic stimulus, aggressive monetary easing leads to excessive inflation, and then eventually Bank of Japan had to start to tighten and crashing the economy back into negative growth and lower inflation. So fortunately, this didn't happen, but we do think this still remains one of the risk scenarios. Another risk scenario is a back to deflation scenario. So fortunately, again, it didn't quite happen to Japan, but this was a risk scenario that could have happened with certain economic shock, either domestic or external. So the reason, what did happen to Japan through 2012, 2014, 15, 16 is basically, the actual path of the economy didn't resemble any of the scenarios, positive and negative, but then it was kind of, initially 2012 to 14, it seemed like it was following the path of Abenomics, but I believe the policy mistake for Japan was to raise consumption tax in 2015. So that did derail Japanese economy from the path of Abenomics, and they basically crashed growth as well as inflation. So I think the negative outcome could have been back to deflation But however, Japan did seem to be recovering from 2016 to 17. So I think we are still this. So Japan hasn't really managed to succeed on Abenomics, but hasn't really failed as because deflation didn't really take root in Japan again. So what would be the most likely outcome? So could Japan go back to the path of Abenomics, which is higher growth, combination of higher growth and reflation, or back to deflation? So this is a scoring mechanism. So there's a scoring mechanism we have developed, which allocates 100 points into three scenarios. Obviously, there were other scenarios Japan could lead, but then we restricted to coming more or less having a proxy of a probability of where Japan is headed. If it does the economy resemble the economic scenario of going back to deflation, or Abenomics to succeed or stagflation? So there is some material on how we have scored, how the scoring is done, but basically, simply put, so we selected about 20, I think it was 25, 26 economic indicators, and basically we compare it to the scenario projections of how these economic indicators should show if Japan was to be on the path of deflation or Abenomics to succeed. So we'll be coming back to this chart later. But then what we did is, so this is a more detailed economic projection table for Abenomics to succeed scenario. So we basically came up with projections or assumptions of how economy should look like if Abenomics economic scenario is to take hold in Japan. So we have only listed GDP, private consumption, inflation, but we also have an assumption for exchange rates. We also have an assumption for other aspects of the economy, private capital expenditure, structural reform, etc., and also as well as the balance of payment. So with these projections for each scenario, we basically compare them to what actually happened and make a judgmental score for each indicator on which scenario it resembles, and then we basically make a summation of the scoring, and then that's how we basically come up with the scoring mechanism. So for more details, I'd be happy to send past publication to you if you're interested. So please do get in touch with us for more details on how we score each scenarios. But the result is such that the back to deflation scenario had a very high scoring in 2016. I think rise in yen appreciation had a lot to do with it. Equity market did decline sharply in 2016, and external environment also deteriorated. So these were the factors, and then there was a full decline in commodity prices. So all these factors contributed to the rise in back to deflation scenario. But however, in the second half of 2016 and in the first half of 2017, these risk factors subsided to some extent. And then in its place, there was a rise in the score for Abenomics to succeed. But you do notice that while the score for positive scenario is on its rise, but it is still below back to deflation scenarios. I would say the biggest factor behind this is, well, there are two. One is that the inflation itself is still not rising at all. The wage remains weak. CPI inflation is hardly rising. And then like external environment, overseas economy is, well, it's getting stronger. However, it remains, if we take the world economy as a whole, it is still having low growth, mid 3%, I believe 3.6%, according to the forecast by IMF. But I think in order for the world economy to be very supportive for Japanese economy and Abenomics, we would expect to be seeing about 4% growth. So the global economic environment is not particularly supportive for the Abenomics to succeed. So on these factors, we still believe that overall deflation scenario is still outweighing that of Abenomics to succeed scenario, and for sure stagflation scenario. So we will skip the next two pages. So this is just to showcase that we have fairly detailed projections for these scenario forecasts, and we have these detailed projections because this is actually one of the products we provide to Japanese financial institutions. One table I like to spend just a little more time on is risk weighted. So what we did here is pretty simple. So we have projections for three scenarios, and we also have a scoring for three scenarios. So it's relatively straightforward to have a weighted scenario. So this is weighted scenario according to the scoring we gave to deflation, Abenomics to succeed, and stagflation scenario. So, and as I look at the figures, so this is not quite our forecast, but this is more of a mixture of scenarios. But I do believe that the result is looks quite reasonable, and I would say slightly with optimistic, with a slightly positive tone. So the growth rate is still lower than 1% for 2017-18, but then it is positive, and we do see GDP gap to shrink, to widen, to become more positive, and that is leading to higher domestic demand rise in domestic demand deflator, as well as CPI inflation. So this, I would say, this almost looks like a benign and perhaps a slow Abenomics to succeed scenario in our view. So, and I would be inclined to also accept this as kind of a expected forecast when we need to come up with a forecast for the Japanese economy. So that would be our medium-term scenario projection for Japan. So we will be moving on to the next part. So that's a thematic issue, Bank of Japan balance sheet, and how the quantitative easing of Bank of Japan are progressing. So we are, well, there are a lot of people who are concerned about the Bank of Japan, and we are definitely one of them. So one thorny issue for Bank of Japan is if BOJ could keep purchasing government bonds. So as you could see from this chart, Bank of Japan already owns 44% of the whole Japanese government bond market. And Bank of Japan is definitely by far the largest and dominant player in the government bond market. And as another issue is you do see that the rise in its market share has been very rapid. And there are many economists who argue that the Bank of Japan is reaching the limit to how much it could own, how much market ownership it could have on JGB market. Well, I would say I think there are actually more economists who argue there will be a limit. So one is IMF. So this is a chart which came from working paper done by economists at IMF who argue that 41 to 45% of the market share is the limit, the upper limit for Bank of Japan. So for details, you are encouraged to Google this working paper and read it. But then, in essence, what they argue is relatively simple. In their point of view, insurance companies, pension funds, they are unlikely to sell government bonds beyond certain points because they have a regulatory reason to hold on to Japanese government bonds. From asset liability management point of view, and also regulatory point of view, they are required to match the duration of their asset to their long-term duration liability. So both, life insurance and pension. And then in Japan, government bond is one of the only assets, marketable assets, which has a long duration. So unlike banks, insurance company, pension funds, they cannot sell JGBs. They have to hold on to those JGBs. And that is actually what happened. So this is government bond holding of life insurance in Japan. And you do see instead of selling to Bank of Japan, they have basically hold on to government bond holding even at the current rate. So as I meet risk managers in Japan, also at the life insurance companies and pension asset managers, they basically agree that the long-term interest rates in Japan is in a bubble situation. So they do feel, they do explicitly say it's just crazy for a 20-year government bond rate to be as low as 0.2, 0.3%. So basically offers no return, virtually no return, but then they do pose risk. They have a duration risk. So, but even at such bubble valuation, they feel they have to hold on to government bonds because they have asset liability management to manage. So if this line of thinking is correct, yes, there is a limit to how much Bank of Japan can buy JGBs, and sooner or later, Bank of Japan will have to stop purchasing government bond market. Another another limit to the quantitative easing for BOJ is the exposure to equity market. So in this chart, you're saying, so there are two lines, one red, one blue, and the red one is the holding of equity ETF by Bank of Japan. And you do see that toward 2018, their equity ETF holding will exceed 20 trillion yen. And toward the end of 2018, it will reach 23 trillion yen. So, and the blue line shows the capital. So Bank of Japan capital and provision have been increasing slightly, slowly, but then it will be as still it won't be exceeding 9 trillion toward the end of 2018. So as I wrote at the top of this page, Bank of Japan will not be able to pass market stress test. So according to Bank of Japan's guidance, for the tail risk scenario, one of the guideline numbers they show to private sector banks is for the topics to fall by 50%. But then if Japanese equity market does decline by 50% at the end of 2018, what it means is that the Bank of Japan will incur over 10 trillion capital loss, which they have to mark to market according to their financial accounting procedures. So, and if that happens, that will basically wipe out the capital of Bank of Japan. So, I do believe Bank of Japan has several issues, but then in my view, more than JGB holding, I believe this rise in the exposure to equity market, I think this is actually the biggest issue Bank of Japan should come up with a way to manage it in relatively near future. So I would say, due to that time, I'd be happy to come back to this, but let's skip this page and come right to the kind of concluding part of this discussion on Bank of Japan's balance sheet. So one controversial issue is, okay, so if Bank of Japan may have to incur losses on its asset and their equity may be wiped out. But then there are a number of economists who would argue that it doesn't matter. A central bank will never become actually bankrupt because it can always print money to pay. And they also argue that temporary loss can be offset by their long-term seigniorage central banks tend to enjoy. And then in the end, central bank is a part of government, so government can recapitalize, and so that credibility of a central bank as a financial institution is backed up by the government. So according to these theories, capital shortage doesn't matter. So Bank of Japan can take a lot of losses, but then it won't affect it shouldn't affect monetary policy, and it is not a problem. So that's what they argue. But I don't agree with this argument. I believe it will be a problem for Bank of Japan to incur losses to the extent that it might even become technically bankrupt. So those are the three reasons. But then I would say the biggest reason is not just the loss, but then how the market will perceive it. The number two says, well, recapitalization process threatens the independence of central bank. So Bank of Japan law doesn't address this kind of situation. There is no legal process, established legal process to recapitalize Bank of Japan. So there is uncertainty, and this uncertainty, well, as line 3 says, uncertainty threatens the credibility of monetary policy. I think at this point is most easy to understand when you think about what would happen if Bank of Japan suffers large losses on its equity assets. So I think Japanese populations and also even policymakers are often not aware of this risk. And when this risk scenario does take place, and when newspapers start to run that Bank of Japan has lost trillions of money through this equity purchase operation, well, the Japanese population policymaker will start to think about maybe was it the correct policy? Was it a good monetary policy for Bank of Japan to be buying this much of equity? And the problem is this argument. People will start to discuss whether Bank of Japan should continue this policy or not in the middle of downturn, whatever that is, but then whatever that is causing the downturn in the equity market. So from market point of view, basically Bank of Japan may be choosing to stop its equity purchase in the middle of a downturn. So that could even worsen, that will actually turn into a vicious cycle. So I think for these reasons, these uncertainties, the potential need of recapitalization, and then on top, absence of clarity, legal in what Bank of Japan will do in these cases, I think that would definitely undermine the credibility and independence of central bank, and I do believe this is something Bank of Japan should address sooner rather than later. So with that, I would like to conclude this part of our seminar, and I'll be very happy to take any questions if you have any. So you could write questions in the chat, or given there are 5 of us, basically, so that means, which means actually there are only 3 external guests. If you prefer, you can unmute yourself and speak the questions, or you can write it. Okay. Concerns on Japanese economy by the North Korea's missile test. Well, I am not concerned unless there is unless an actual military conflict arises. I don't think there will be much concern to the Japanese economy. So I mean, there are 2 ways to think about it, but then one way is if you're worried about consumer impact to the consumer sentiment, well, look at Europe. Europe has been under threat of terrorism in France, in Spain, in UK, and I would say that kind of risk must be so much more real than this idea of North Korea, shooting missile at Japan. I mean, they do hear it on the news, but then I'm sure people are feeling people won't be able to see it as a real risk. So I do not think that this talk of missile from North Korea is having any effect, any significant effect on consumer sentiment. So on that sense, I don't think it matters much to the Japanese economy. If exchange rate market react to this news through yen appreciation, yes, it does have some effect on Japanese economy through yen appreciation. It will hinder the reflation pressure from stronger economy. But I do think there are measures Bank of Japan can take to counter such yen appreciation. So in the end, so it depends on how much it will escalate. But I don't think this missile talk is much of a threat to the Japanese economy. So. Well, I thank you. Why are we anticipating negative GDP growth in 2020? I think you have this question because you might be thinking about Olympic. What about the Olympic? When good for the Japanese economy? Well, the answer why it's negative GDP, there could be negative GDP growth is primarily the consumption tax. So Japanese government is currently scheduled to raise consumption tax from 8% to 10%. So that's basically the primary reason why the growth should slow down in 2020. So as for the positive economic effect of the Olympic, I think the past analysis tend to show positive economic effects tend to materialize before the year of the Olympic, and that has been the case in the previous games. And well, what about the tourism, etc.? Well, there has been evidences that having Olympic Games actually prevent no more tourists from coming to Japan, and that was actually the case for London Olympic. In the London Olympic, the number of tourists actually declined year on year when the Olympic was held in London. Okay, so if these, so there's another question. Potential for Bank of Japan to experience capital loss, it seems that would still take a major. So this is a question. What are the odds you're putting on this political issue detail coming into the news? Political issues? Well, yes, but we haven't had major downturn in so we haven't had any global recession for the last 10 years. And well, there are people argue there's a certain 10-year cycle for the global recession, and the last one was the Lehman shock that ended in 2009, 2010. So it's been about time. So I do believe there will be a recession. It's difficult to anticipate where the recession will come from. It could come from US, it could come from China, it could come from Japan. I think it's difficult to anticipate, but then I think it is we do have to take into account that there will be some downturn in the global economy and downturn, significant decline in equity market at some point in the future. So long as Bank of Japan hold on to, and even keep expanding its equity asset, when that downturn happens, Bank of Japan will take a hit. Okay, so the media, even politicians are discussing on it. So some of the cabinet members start to question the validity of current BOJ's monetary policy. So and even as I speak with policymaker within Bank of Japan, they are certainly concerned. I think the issue of how to slowly exit from these policies, this is increasing the topic people within financial industry discuss. And there's going to be actually one major conference I will be attending next Monday, and the potential exit, how Bank of Japan could manage the exit, and how Bank of Japan as well as other policymakers should be thinking about or should be preparing for its eventual exit. We'll be discussing on these issues. So I think I guess media may be slow to pick up on this, but then I think the risk is that by the time media start to make a fuss about it, it could be a situation where the risk is already materializing. So I think it's important that well, it would be ideal if Japanese government and BOJ clarifies what could happen in such and such cases before Japan faces the actual materializing of these risk events. Okay, well, I think so. We have one more question from. So I'm very happy to have a question from all the participants. So with that, I think we can make this the last question. So the last question was, are there any growth sector industries that I think will support Japan's economic recovery? Well, no, I mean I can answer some obvious industries. Well, in the long term, it has to be the healthcare. It has to be, well, the one thing we know for sure is Japan is aging, and definitely that would be basically one of the only industries where the growth is sure to rise. So yes, there are issues because these social welfare tend to be government financed, and so it's a relatively tricky area for private industry to operate in. But when you think about, okay, what would be the growth industry in Japan, uniquely in Japan, I think it has to be the healthcare. In terms of otherwise, I will be in the longer term. Depends on the economic outlook you see, but then I'm relatively optimistic in the near future. In the near term, say 1 to 2 years, I do think inflation will pick up. So if you want to ride this 12 to 20 months horizon, I guess you do want to expose yourself to inflation. So asset prices, we could argue that there could be asset prices once economists realizes that this scenario of inflation is actually happening. I think there will be people who like to be more heavier on inflation resistant assets. So I think that could be the short term play. So real estate prices. So from Japan's point of view, we do see, well, there has been a rise in real estate prices in Japan in the last few years. But then when you look at it in comparison to how the price has developed in overseas, I think one could argue that, relatively speaking, real estate in Japan are still relatively cheaper than many parts of the world. So if we are to believe in a growth story, at least kind of benign growth story with Japan continuing to enjoy reflation, definitely, I guess real estate would be one. But then what I would like to stress is that can be a short-term play in a sense that 12 to 24 months play. And I'm actually, I would be cautious to pessimistic beyond 1 to 2 years. I think this short-term inflation could actually pose another could be bigger problem, how Japanese public finance can cope with high inflation environment, and what could happen to Bank of Japan's balance sheet if we choose to exit. So there could be some turbulence. So it's basically be careful what you wish for story when it comes to inflation. Okay, with that, I thank you again for joining this webinar, and I do hope to I do hope we will have a chance somewhere to continue to discuss issues. So thank you very much, and have a nice rest of the day or evening or the rest of the afternoon. Thank you very much. Bye.